Everyone. Thank you for joining us for a webinar, MIFA's webinar called Financial Planning with ABLE Accounts. And my name is Julie Shields Rutina, and I am the Director of College Planning and Education at MIFA. And we're going to get started in a moment. We have two terrific speakers for you today. We're going to have a lot of good information, but I just want to make sure that technology-wise, we're all set. So if everyone could let me know that you can see the screen with our two presenters, Mary and Cindy, and that you can hear my voice clearly. Maybe give me a hand over on the right of your screen, or just you can write into the question box. And I'll just wait one moment to make sure that we're all good to go here. And Cindy, can I just, do you want to say hello just so I can be sure that you're
I'm here.
Great, wonderful. All right. Let me see. I want to make sure I see other hands. Yes, everyone says we're good to go. Well, thank you for joining us today. What I will share is that tomorrow, being May 29th, 5/29, MIFA likes to celebrate this week by talking about 529 plans, helping people save for college. And this year, we're also helping people save for everything for the future with ABLE accounts, which are 529A accounts. And so this webinar is going to be on ABLE accounts. You're going to learn all the great features and benefits of ABLE accounts and how they fit into a financial plan. So you will have two great speakers, and then we will also be happy to answer your questions as we go along, and I'll be monitoring that. So if you have questions, please write them in the question and answer section, and we will be sure to get to those as we go along. I'm thinking it will be about an hour for this webinar. So anything else? I think we're all good. So first, I'm going to introduce our speakers. I'm so happy to introduce my colleague, Mary Rubenis. And Mary is the outreach manager for the Attainable program. And that is the Massachusetts ABLE Savings Plan. Mary's job is to coordinate educational outreach, strategic partnership building, and marketing strategy to spread awareness of ABLE accounts and their benefits. And she does that every day, every week. It's wonderful. Thank you, Mary. And then we're so fortunate to have our colleague Cynthia Haddad with us today. And Cindy is a certified financial planner, and she is a partner and wealth advisor with Affinia Financial Group out of Burlington, Massachusetts. She is a nationally recognized leader in the field of special needs financial planning and an accomplished author, speaker, and media resource on the many complexities of planning that families need to know. As a sibling of an adult brother with special needs, she brings her personal perspective along with her professional expertise to us today. So thank you. All right, and I guess we can go through the next slide, and I can see if I missed anything with housekeeping, right? You're all muted, but you can write in the question box. And Mary has also uploaded a brochure on Attainable, which she's going to tell you all about, and the slides. So you will be able to see those as well, and you can download those right from the right-hand side of your screen. So Mary, I guess we'll start with you. And can you tell us all about ABLE and about MIFA's Attainable program as well?
Sure. Thank you, Julie, so much. I guess I'll start by, you kind of spoke a little bit about what I do. I'll just start a little bit and just share what, who MIFA is and what we do at MIFA. So we are a not-for-profit state authority, and essentially our mission is to help families plan, save, pay for college. We do that through a variety of ways, a lot of free guidance around the whole process. We have some savings plans. Attainable is one of those, and we also do private loans. And so Attainable is the Massachusetts Able Savings Plan. And when it was launched back in 2017, we chose Fidelity Investment to be the program manager. And the reason for that coming about or happening was we had a previous relationship with them back in 1999. We had selected them to manage the Massachusetts 529 College Savings Program. And so obviously when Attainable, the ABLE plan, was launched in 2017, it was natural for us to partner with them for their expertise in money management. And so that's where that partnership takes place. And so MIFA is the state sponsor for Attainable, and Fidelity is the program manager. And so what that means is if you're going to open an Attainable account, you're going to do it through Fidelity. You'll see a link later how to do that. You can do it online. You can also do it over the phone. I can type in the chat the 800 number. You can also do it over the phone. And lastly, it's available nationwide. You don't have to be a Massachusetts resident to open an Attainable account. It's available nationwide. And so what is the ABLE Act, or what does the acronym stand for? So it actually stands for Achieving a Better Life Experience, and it amended the federal tax code back in 2014 when the legislation was passed. And it added this section 529A, which, like Julie mentioned, we're celebrating 529s officially tomorrow, but we've been doing things all week. So an ABLE account is a 529A, and it established these ABLE accounts. They're tax-exempt accounts, meaning there's no federal tax on the earnings on Attainable, and if you're a Massachusetts resident, there's no Mass state tax on that as well. And it established these accounts for a qualified individual with a disability to use it for these qualified disability expenses while still keeping their eligibility for federal public benefits like SSI, Medicaid, if they do receive those benefits. And so how are you eligible to open Attainable or an ABLE account? The disability has to have occurred prior to the age of 26. And if that individual is getting SSI or SSDI, they're automatically eligible. Or if they meet the age requirement and they meet one of the conditions that Social Security has a list of compassionate allowances, if you're meeting one of those and meet the age requirement, then you're going to be eligible to open an ABLE account. And then lastly, as long as you meet the age requirement prior to 26, you can self-certify that you have some type of physical disability, a mental health disability, intellectual disability. You can self-certify that you have one of those, and therefore you meet the requirements to open an ABLE account. And so these are just some of the qualified expenses for Attainable or an ABLE account. It's the same across the board nationwide, all the plans in terms of qualified expenses. These are broad categories. I tell people these are the general categories. There are definitely going to be things that fall outside this, but it's going to be things like healthcare, housing. You can use it to pay your rent, education. You can use it for college tuition, books, computer, transportation. If you needed to buy a car or you're using Uber, you can use it for that. Assistive technology. You need an iPad to communicate. Employment training, personal support services, something like a PCA, and basic living needs. So things like, food, clothing, that type of thing, you can use your ABLE account for. And I guess just lastly, the list isn't exhaustive. So I tell people there are definitely going to be things that fall outside it. Like if you had a child who needed to go to therapeutic camp in the summer, that's not on the list, but that certainly relates to their disability, and would it be covered? Absolutely. So you can use it for that as well. And so some of the benefits of, an ABLE account, really, the whole reason for these to come about were to allow someone with these benefits to be able to save over the $2,000 asset cap, which still exists. And so these accounts allow you to do that. If you're receiving these benefits, it allows you to save over that $2,000 and still keep your eligibility. It's really, provides a new way to new investment options. It's really about financial independence. And then there are multiple tax benefits as well that we can talk about as to why these are so beneficial. And just to clarify, the person with the disability is the account owner or the beneficiary on an ABLE account. And then just some of the features of Attainable in terms of how much you can put into the account in a calendar year. And this is the same across the board for all the ABLE programs. 15,000 is that amount. So you can contribute up to 15,000 in a calendar year. If you are receiving the SSI, the number to keep in mind is 100,000. SSI, essentially you can save up to $100,000 in an ABLE account and it's protected, which is fantastic. So 100,000 is that mark to keep in mind. You can save up to that amount. If you go over that, they will suspend the benefit until you drop back under. So you just want to keep that in mind. And then lastly, specific for Attainable is you can save up to $400,000 in total, including the earnings in one of these accounts. So this is just a quick, quick overview of ABLE. We wanted to really get into more, I guess, real life details with Cindy. So I'm just going to lastly share some resources. One of them that's phenomenal is the ABLE National Resource Center, and it's ablenrc.org. I highly recommend you go there to learn everything possible about ABLE. They do webinars, sign up for the webinars. They're on social media. If you're on social media, follow them. You can actually compare state plans there. There are now over, I believe, over 42 states that have programs. You want to go there, you can check out, the other plans and find really just a wealth of information. Also the MEFA site, which is mefa.org. We have a dedicated landing page for Attainable. Please go there. There's a lot of local resources specific to Massachusetts there, benefits counseling, that type of thing. And then lastly, this is the landing page where you would go to open the account, fidelity.com/able. You could go there, again, just learn more. Fidelity has a ton of information on the site. There's a disclosure document right on that landing page that you can read everything you possibly want to know about these accounts. So I highly encourage you to go there. And then lastly, on the MEFA site as well, we have a registration form that you can sign up for. We post updates to the ABLE programs, nationwide. We post a lot of disability related content, blog posts that we put out. So if you want to register for those emails, you can do that on the Attainable landing page. And then lastly, I'll just say quickly, like Julie mentioned, there's some handouts that are in that section where it says handouts, and there's an Attainable brochure, and there's also a PDF of the slides, so you can grab those if you would like. So I just wanted to mention that.
Thank you, Mary. And I'm sure people will have questions, so we'll, if you have questions, type them in, and we'll get to those. But I want to turn to Cindy. And Cindy, and I'm sorry we can't see you, but we will hear from you, and thank you. So can you tell us a little bit about your work?
Oops.
I think you just have to unmute. Oh, Mary, maybe you can unmute.
I've got it. Here I am.
Oh, great. Okay.
Magic of technology.
I know.
Cindy, are you there? Yes?
I'm here.
Okay.
Yes.
So yeah, please share with us about your work.
First of all, I'm so happy to be here, Julie and Mary. And I also want to thank you and MEFA for helping me personally. As you know, I have a high school senior who just graduated, or in the midst of all those graduation ceremonies, quarantined. But MEFA has been a great resource with the workshops, the informational sessions you held at the high school. You added the deadlines, you really simplified the process for financing a college education. So I found it tremendously helpful. The articles that both of you had written, I've adhered to, I've shared them with our clients. So I thank you both, and also all of MEFA. So it's nice for me to be able to be here and give something back to you today. So
Thank
my practice, as you know, is all about special needs financial planning as well as traditional financial planning. I first started about 20 plus years ago about my brother trying to plan for his future, and my mother not wanting him to be a financial burden to any of us. And her theory was always, if he could pay his own way, then it would be easier for him to tag along with us. So if there was money for him to pay for a vacation, we might welcome him on a vacation with us versus having that financial burden of having to take care of that as well. And then at the time that I started to think, gee, there's a lot of me out there, no one was really providing special needs financial planning or even thinking about planning for the future of our family members. Just people either didn't live that long, or they thought the state took care of everything, or people with disabilities didn't really need anything. A lot of misinformation was out there. And then I bumped into John Nadworny, also a CFP, and he's been my partner ever since. He has a son with Down syndrome, and together we founded Special Needs Financial Planning. His lovely, amazing daughter, Alexandria Nadworny, also a CFP, joined us about 5 years ago. And then together we launched Affinia Financial Group on October 1st as a multi-generational firm. And we've all been working virtually for the past several weeks, and we're excited to go back into the office in stages in the next couple of weeks. But as certified financial planners, we need to know the various tools and strategies that are available for our clients, and also how they apply to each family's unique situation. And special needs financial planning, in addition to the traditional retirement planning, estate planning, tax planning, investment planning, we have to plan for 2 generations. And parents have to really plan for 2 retirements. And when we talk about what planning needs, we use the analogy of, well, now we say, remember when you used to go on the airplane and they'd say, put on your own oxygen mask first, and then you can help the person next to you or help your children. Now I say, well, put on your own Corona mask today, and then you'll be able to survive and help your children. So we're planning for 2 generations in addition to all that, typical financial planning, wealth management, insurance planning, tax planning, all that stuff that goes on. So that's why special needs financial planning is very unique. It's planning for 2 generations. And that's what we do.
Thank you. And so can you tell us, so how has ABLE begun to fit into your work?
Oh gosh, ABLE has been just a tremendous resource for one of those tools that we have in our toolbox. And since the start of ABLE, when they launched, it basically said, you know what, the government is acknowledging that saving for your child is a hard thing, and it's also a very important thing, and acknowledging that individuals with special needs can have savings accounts without disqualifying for government benefits. And just a quick FYI, Massachusetts was one of the brainchilds that started thinking about a tax-deferred savings option. And this was way before ABLE came on board. John Nadworny, Daphne Kraut-Gordon, attorney Don Friedman, and Jim Brett were all under the direction of Dr. Marty Krause and the Massachusetts Governor's Commission on Mental Retardation. And they brought to the attention of President Bush the tax-deferred savings option. So here we are in Massachusetts. The ABLE account has really inspired us to even update our book, the Special Needs Planning Guide, to include the provisions of ABLE and examples and how wonderful it can be and how it fits into people's planning. Because the big question that we often hear is, how do I save for my child's future? And we have tools, special needs trusts are one of the more common tools that we've used that help to protect eligibility for government benefits and leave money to a child. The other questions are, how much do I need? When do I fund a special needs trust? So all of those big questions were often answered by a special needs trust. And just to give a primer on the 3 basic types of trust, all these trusts protect government benefits because of the spending rules. And they all need to have an attorney to draft the documents. But an ABLE account, you don't need to have an attorney to draft the documents. And an ABLE account's a little bit easier to fund than opening up an account for a special needs trust. The tax implications, et cetera, that we'll get through later. But basically there's, first party special needs trust, which is often what we use for legal settlements or inheritances. And those are usually funded during the lifetime of the parent. But then when the child dies as the beneficiary, the remainder goes to Medicaid, similar to ABLE accounts. But they're unlimited of how much can go into a first party trust. ABLE accounts are limited to $15,000 per year. So there's some similarities and there's some differences. A traditional third-party special needs trust, which is typical with a parent or maybe a grandparent, would establish with their attorney as part of their estate plan, and they usually fund those upon death from their estate, from their beneficiary designation. And oftentimes an ABLE is not funded directly as an IRA beneficiary, but a special needs trust, a third-party special needs trust, can be named as a beneficiary. And there's lots that can happen from within that special needs trust. Then there's also the pooled trust, which is often from a charity. There's the Plan of Massachusetts and Rhode Island, Berkshire Arc, and there's others throughout the country. But when the beneficiary dies on a pooled trust, the remainder usually goes to the charity. Just let me back up on the third-party special needs trust. When the beneficiary dies, the remainder goes to whoever the parents have named as the remainder beneficiaries. It doesn't go back to Medicaid. So now we have ABLE. That's also able, you can fund it during the lifetime of a parent. There's some flexibility, and the key flexibility on the distributions of an ABLE versus a special needs trust is ABLEs can pay for housing expenses. Special needs trusts cannot always pay for housing expenses. So having an ABLE on board is a great complement in our planning options and our strategies. Of course, I have to give the caveat, it's not for everyone. And, you know, careful analysis should be made, and speak with your financial and legal advisors and all those disclaimers that go on. But ABLE complements, you know, so many planning needs, from young families, you know, families with young children that want to save for the future, gifts from grandparents and parents, you know, teenagers that have money that, you know, saved in a uniform transfers to minor account or UGMA, UTMA, or some of those old savings bonds. And then before they turn age 18 and apply for, as Mary said, supplemental security income, SSI, they can't have more than $2,000 in their name, or they can't receive SSI. So all those, you know, teen years, we have to try and maximize uses of ABLE accounts. Even individuals that are working that have disabilities, they can save beyond that $2,000 limit and still qualify for certain government benefits. And it also provides independence for individuals with disabilities to manage their own money. So there's lots of ways that ABLE can complement a financial plan, you know, short-term, midterm, and long-term. We just have to remember all those rules that Mary mentioned earlier. But it's a great tool.
So those are, I think you gave a very comprehensive answer there. That's terrific. Do you have, I think when we were speaking, I know you had a couple of interesting case studies where you were able to help families by piecing all of this together. Do you want to share one of those?
Oh, I had lots of good ones, and I thought of more last night, but there's so many ways that we can use ABLE. But some of the ones that were those aha moments of ABLE really can make a difference in somebody's life right now. The 529 plans. Parents often don't realize when their child's very young that they may have some challenges that might prevent them to going to a typical 4-year college or university. So they save as much as they can in a 529 savings plan. By the time the child's 15, 16, they're realizing, uh-oh, now what do we do with all this money in the 529? If we take it out, we get penalties. You know, what do we do with this 529 college savings plan if our child is not going to attend college? So we had we have several, this happens a lot, so I'll just give an example. Somebody that had $100,000 saved in the 529 plan, and their child was 15 years old. So they had 3 more years for us to plan before they could apply for SSI and get the assets down to under $2,000. So what we did with that is we gifted $15,000 per year to an ABLE account. So we went from the 529 simple to the 529A. We did it in $15,000 per year increments. So for 3 years, we were able to transfer from that $100,000 529, $45,000 to the ABLE 529A. Then we were able to transfer the balance that was in that account to their younger son in their 529 account. Their other son was also overfunded, but that's a legacy that they could leave to the future grandchildren if there's any money left over. So now we've, haven't jeopardized the tax planning or anything like that, but we were able to get the older son eligible for SSI once he turned 18, but we were able to preserve 45,000 by using the ABLE account over a 3-year period of contributions. So that was a win-win. I looked like such the hero with that one. And then sometimes there's an unexpected inheritance. One situation, the client called, and the son got $7,000 inheritance, so he thought he had to open up an account in the name of his special needs trust. Had to go back, to the attorney, make sure everything was current, spent a couple more $1,000, and then I said, you know what, we have this great tool now, it's called an ABLE account. We put the $7,000 directly into the ABLE account. We didn't even have to go through the whole expense of setting up the trust, filing a separate tax return for the special needs trust. Simple, and he's so happy he can use the money as he deems appropriate. It's also 529As, great gifts from grandparents. Oftentimes I hear from clients that, oh my goodness, my mother-in-law insists she wants to distribute all the grandchildren equally. She wants to give them all $15,000 a year. And I keep saying, you can't give anything to my daughter, Susie, because it'll knock her off her benefits. Now we can say, thank you. Why don't we put Susie's share into a 529 ABLE account? And the other kids can all have their 529. And everybody's happy. And grandparents are thrilled that they were able to treat all of their grandchildren equally. So the tool comes up in so many different ways. So those are some of the other thoughts that I had coming up.
Those are terrific, Cindy. Thank you. It's nice to have to be able to hear those stories, and I think people can probably relate to one or all of those. So I guess I'll just turn back to Mary and ask if you want to just talk to us about a couple of the common questions you hear, the most common questions you hear about ABLE accounts, and maybe just also about some of the specific benefits.
Sure. Yeah. Thanks, Julie. Yeah, I guess, common questions are definitely, what can we spend it on? Certainly expenses. I think another big one, which is why it's so great to have Cindy here today, is, should I do an ABLE account or should I do a special needs trust, or what's the difference? And so I always tell people you need to consult, obviously, a financial professional or tax professional. But I think essentially I tell people they're both great tools. They can both work really well together. They can actually complement each other really well if you can do both. Like Cindy mentioned, you can pay housing directly from an ABLE account. You can't do that with a trust. And so a lot of times what people might do is if they want to use the funds from the trust, they'll actually transfer the money from the trust into the ABLE account and then pay the housing. So that's a good example of how they can work really nicely and mesh together. I think a great benefit about ABLE, and she already touched on this, is just the accessibility for people. You can open it yourself. You don't have to hire anyone to do it. It really has broad spending power. You can use it for housing, food, all those list of categories that we talked about, healthcare. Fidelity also offers how these essentially work is when the money is in the ABLE account, it's protected, and then when you're going to go to pay your expenses, you're going to transfer it, say, electronically to your checking account. They have something called a cash management account, which essentially is a free checking account. And so you can link that to your attainable account, and then it comes with a free debit card and free check writing. So it's really just ease, an easy, way to just sort of manage these expenses. So I just like to, mention that it's accessible to pay your bills. And like Cindy already said, it's really just financial independence for people. It does allow you to save over that $2,000 cap and just create, again, just more independence and financial literacy for that individual.
And Mary, I know with your work in the community, you've met lots of wonderful people. And I don't know if you wanted to mention any stories, or I know you had one in particular.
Yeah, so I forgot that. Yeah, so it is true. The best part about my job is certainly meeting people out in the community. And one of those individuals was somebody, the gentleman named Bryan Way. And we were essentially able to share his story, and it got picked up by CNBC. He works 3 jobs. He's able to save over $1,000 a month in his ABLE account. So it was just a great example for us to highlight how beneficial these accounts really are. And so CNBC did the story nationally, and then Channel 5 locally picked up the story, and they actually did a story on Bryan as well. So yeah, and I met him through, I do a lot of work with, you know, local organizations, state organizations, and I met him through a contact I have through Mass Rehab Commission. So we were able to just share his story, which was fantastic.
That's great. So Cindy, I don't know if you have any other thoughts about what are some of the biggest concerns when people come to you? Can you talk a little bit about that? And, you know,
Sure.
what are people most worried about sometimes that you're able to help them with?
Sure. Julie, the biggest question is, you know, what happens if something happens to me?
Yeah.
But then it's also, how do I plan for my own retirement and my child's lifetime needs? So we have to use a combination of different planning tools and strategies, and we do an analysis of, you know, short-term, midterm, and long-term goals. But then we have to figure out, where are they financially? What can they achieve from a financial standpoint? So the biggest question is, when should they start to save? And should they use an ABLE account? You know, we always say, you know, don't start saving in an ABLE too soon, because you could easily go over the 100,000. But let's be mindful of when you need the funds and how you should be saving. And then the other question always is, especially around ABLE, is which ABLE account to use. Of course, as financial advisors, your financial advisor cannot help you open up an ABLE account. We're not supposed to, although people try to. There's no commissions or anything like that for an advisor. So we usually refer folks to, as Mary said, the National ABLE Resource Center, or ABLE National Resource Center. Most of our clients in Massachusetts, they do use the Attainable account with Fidelity. It's simple, it's easy. They like it, they're familiar. And then, you know, how much does my child, how much money will he need or she need? And that all depends on their needs and their abilities. And we do assessments periodically along the way to help us to make some big decisions as to how much they should save and how should they fund their trusts, how should they leave money to their child, and how do we supplement during the lifetime of the parents, but also upon the death of the parents. So again, that planning for two generations and the two retirements, those are really the big questions people have, especially when making these big decisions. And of course, we have to get, you know, legal advice and oftentimes tax planning advice. So we work as a team with advisors, and each advisor is going to think from a different perspective to weigh the pros and cons of each instrument or each financial tool and strategy. So it depends on the situation. So
Yeah.
no one answer.
Right, right. Well, I'm just going to see if we have any questions, and I'll encourage folks on the call to type in any questions so we can make sure we can answer those. But in the meantime, maybe I'll just go back to you, Mary, and I'll come back to you, Cindy. What last points have we not covered about ABLE plans and about Attainable that you might like to get across? And I'll see if there are any questions, and I'll ask the same of you, Cindy.
Yeah, I think one that's come up, you know, in reference to trust is, you know, can you make a distribution to an ABLE account from a trust? And the answer is yes, you can do that, or the trust can be amended to do that. And how do they differ? You know, in one basic thing is trusts can accept unlimited dollars, and they can accept non-cash assets like real estate. But ABLE has those yearly limits, and there's a total overall limit as well. So I guess those are two things to touch on in terms of how they differ. And just, I mentioned this earlier, but they do work really nicely together, and that housing expense example was one. And I know Cindy has some experience with that as well, but just in terms of, you know, being able to move the money from the trust into the ABLE account and then pay your expenses that way.
Very nice.
And
how
That's
about,
a great, Mary.
yeah, how about you, Cindy?
Yeah. Mary had
Yeah.
another thought. Did you?
I was just going to say, you know, I don't know, or if you want to touch on this, Cindy, some of the tax benefits, you know, the able to work legislation. So, you know, the person who's with the account owner who's actually working, if they're working, they can actually contribute over that $15,000 cap, up to $12,490. There's a savers credit that people can take advantage of. It's essentially a tax credit based on your contribution to the ABLE account. What else can I mention? You can roll over from a regular 529 up to the 15K. Like Cindy mentioned, if you had saved in that and now you realize you're not going to use it, you can roll over from the regular 529 into the 529A. So I just wanted to make sure we highlighted a couple of those benefits.
And the tax exempt growth.
Yes. Yep.
Right?
Yep.
And then there's no penalties if it's used for qualified disability expenses.
Yep.
And the big thing is that having money in an ABLE account helps individuals maintain their eligibility for SSI. Remember that $2,000 limit that would, anything over that they own often disqualifies them for government benefits. Those are all good points. What you had asked about the benefits of having both a trust and an ABLE account. And one example that came to mind was this adorable couple that called me out of the blue. They were living in Florida and they had a condo here in Massachusetts for their adult son. And they were baffled because the son's SSI, supplemental security income check, kept getting reduced and reduced and reduced. And we finally figured out why. It was because the parents were providing for housing. They paid for the condo, they paid for the condo fee, they paid for the taxes. So SSI considered his housing, he was receiving in-kind supports and services from the parents. So he really didn't need his check from SSI. He wasn't really spending it for housing. So it was baffling when we kind of went up the ladder several times to figure out what was going on here. And I kind of came in late into the game. But once we figured out, we have this great tool, ABLE account. They were able to put the money, $15,000 right away into the ABLE account. And the son paid rent to them as the landlord. He restored his SSI benefit because he was paying for housing through ABLE. So that was a huge deal for us to be able to incorporate it. Of course, I looked like the heroine again. Thank you, ABLE. So that was another great thing. Also, so they had a trust, but they kept thinking they were going to fund the trust, when they die. But they didn't want to fund anything for him, but they were able to fund the ABLE account for him. And then he had the independence to be able to write the checks and have that account too. But having a trust and an ABLE account, I had another great example of oftentimes parents will name an adult sibling as the trustee of that special needs trust. Several times this has occurred. Just recently speaking with the brother who was the trustee. Of course, he didn't want to be the naysayer to the brother, but he was also afraid of running out of money. And the brother had some mental health concerns and also kept asking the brother, I want. And the brother who was the trustee had to say, no, you can't have this, you can't have this. But what they ended up doing is we looked at a budget, we built into our budget that how much is the rent? How much are all the housing expenses? So the brother initially transferred from the Special Needs Trust $10,000 to the ABLE account to test out, letting the brother handle the money, letting the brother pay his rent, using that cash management account and have the debit account. And he was able to manage making those rent payments from the ABLE account. So then when he came to the brother and said, I want to go on a trip, or I want to buy some AirPods or something like that, those fun things, the brother was able to say, sure, that's what your trust is for. So we built that into the budget. Now the sibling is the hero and the brother is more independent and very proud. And it's also helped in their relationship as well. So he's being responsible, taking care of his home, but there's money intended to supplement what the government can provide. And that's a great ABLE story. And how
that is a great ABLE story. That is great.
That was good. I wasn't the hero there, the brother was, but I'll give that to him.
Now we do have some questions. So let's see. Lots came in. So let me ask this one. Is it better, and I believe this is about opening an ABLE account or attainable, is it better to wait until the guardianship process is completed for an individual to set up an ABLE account?
Yeah, that's a great question. So like I mentioned earlier, the person with the disability is the account owner or beneficiary. If they need someone to manage the account for them, or if they're unable to manage it themselves, When you set it up, you're going to set it up with a PSA or a person with signature authority attached to that account, meaning they're going to manage it for that individual. And so that person has to be a parent, a guardian, or a power of attorney. I'm speaking for Attainable. It has to be a parent, a guardian, or a power of attorney. So I would say absolutely you would need to have the guardianship in place before you start to open the account.
Oh, thank you. And I know, Mary, you mentioned the cash management account attached to Attainable. So I believe this question is about that. And the question is the free checking offered by Fidelity? And I know you mentioned that to me. Yeah.
Yep, it is. So Attainable, like I mentioned, you link it to the cash management account, which is a free checking account. It comes with free check writing, and it comes with a free debit card as well. So you would move the money from Attainable into the cash management account and then pay your bills. So yes, it comes with.
And that helps with budgeting too, because you could just transfer over what they need on a monthly basis to pay the bills, right?
Yep, absolutely.
Now, someone did ask, they totally understand the benefits, all the benefits of an ABLE account. What are the downsides, especially if the child passes?
That's always the question, right? What are the downsides? I don't think we touched on too many of those.
No.
Mary, do you want to touch on them, or?
Do you want me to go, Cindy, or you want to take that?
I'm happy to take it, and then we can chime in.
Sure, go ahead.
So one of the downsides, and this is something that we have to, assess before we say, okay, ABLE is great, is the beneficiary. Upon the death of the beneficiary, the remainder beneficiary, Medicaid gets paid back, or Massachusetts Mass Health is paid back as a first party supplemental needs trust. Upon the death of the beneficiary, the state or Medicaid can get paid back in there. So you don't have a choice of necessarily of who the money gets flowed through, but I know there might be some exceptions, Mary, if you want to talk about that.
Yeah, so there's whether or not, actually applies whether or not you have an ABLE account or not. Massachusetts has a Medicaid clawback. And what that means is if that individual received Medicaid during their lifetime, minus any premiums they paid in, the state may or have the potential to claw back some of the money that they've paid out to them. It exists whether or not you have an ABLE account or not. And I tell people the only way to avoid that is to have a trust. But in terms of ABLE, it only applies from the time you've opened the ABLE account until that person's passing. So if they had opened the ABLE account, say, in this year, 2020, and they passed away in 2025, that Medicaid clawback would only apply for those 5 years. If they had received Medicaid numerous years prior to 2020, it doesn't apply to that. It only applies to from the time you have the account opened until you're passing. And then I guess the other thing we should mention is when a person does pass away and they have an ABLE account, the money in the account goes to the person's estate. So you want to make sure that's in place. And then prior to that happening, you can pay funeral expenses, burial expenses, any outstanding disability expenses that they might have, before, like I said, it goes to the estate. But in terms of the clawback, yes, there is one. It's not tied to ABLE, it exists anyway. And one way to avoid it is to have the trust. And like I said, it's only from the time you opened it to your passing.
Thank you. And we do have a question. Can SSDI payments be deposited into an ABLE account?
So I'm not a Social Security expert, so I would say consult them. However, that being said, there's a document that you can go and Google online from Social Security. It's called the Program Operations Manual System, POMS. There's actually a link to it on the MEFA site. If you go to the MEFA landing page for Attainable under resources, I have the link there for the POMS document. And Social Security just updated it just in April and they added that you can now use it for food. They also stated that you can now direct deposit your Social Security checks directly into ABLE. So, you know, I would say look at that, consult that, but obviously consult them. But it appears to be that yes, you can deposit directly into ABLE now, but there's more information contained in that POMS document.
That's great. And then I think I have another question here, and what I'll say to the audience members is, if I don't get to your question, just know that we have these questions and we will actually individually answer them. So you will hear back from us with answers if I don't get to your question. But here's another one. Can a parent be responsible for controlling access to funds in an ABLE account for their child?
Yes, you would set it up. They would be the PSA on the account so that they could manage the account for the child.
That's great.
These are great questions.
Yes. And can term insurance be used for funding an ABLE account?
Meaning upon death?
I know maybe that's one we'll have to look up.
Maybe that's the beneficiary designation. That gets complicated if I'll just address if the beneficiary of the term life insurance policy or any type of life insurance policy names an ABLE account as the beneficiary. It's very tricky because it may be more than $15,000. And, you know, there may have been a couple of months of contributions in ABLE that year. So you have to be real. The better option is to name a supplemental needs trust, a third-party special needs trust, as the beneficiary on the life insurance policy. And the provisions within that trust are to allow the trustee to set up an ABLE account, and then from the proceeds of the life insurance, put $15,000 per year into the ABLE account. And we did a fact check, Mary and I, with attorney Neil Winston over at Winston Law Group in Somerville. And he's also connected with the Special Needs Alliance, which is a national organization of attorneys. And they have great information about ABLE accounts, and also lawyers if you need, you know, attorneys. The Special Needs Alliance. And there's also the Academy of Special Needs Planners. But yeah, we did a little fact check on the trusts. Hopefully that answers the question.
We did.
Thank you. And again, just, you know, as we will get back on some of these other questions we may not get to, please also know that you can contact us afterwards. We're always available. Mary, phone, email, is happy to Mary works with so many families and happy to continue to assist you. So I'll ask this last one, and then I guess I'll just ask you for closing comments. But Mary, the question is, when opening up an ABLE account, it needs to be in the name of the person with the disability, correct?
Yes. Yep. They're the account owner, so they're the beneficiary on the account. That's right.
Great. So any last comments? I just want to keep to our time here.
If there's questions there for me, and if folks just need to ask a question, they can just go directly to our website at specialneedsplanning.com and just ask a question there. Or Mary and Julie will ask me the question for you, however we can help.
That's terrific. Thank you, Cindy. All right, and Mary, you feel like you covered everything?
I think it's a lot to cover. I tell people, you know, you're definitely going to need to hear it more than once. You know, definitely spend time, you know, doing research and just learning about the accounts. Go to ABLE National Resource, you know, the MIFA landing page for Attainable. There's a lot of resources and information there. You know, in my mind, they're just a phenomenal tool. You know, but everyone has to make the decision about what works best for them and their family or an individual. So, but yeah, just really you know, like anything, just become educated.
Thank you. Thank you both so much. And thank you all for participating and your great questions. And please do stay in touch, and we're happy to help. And thank you, Cindy, for your offer of that as well. And
Julie,
hope
thanks for being a great moderator.
thank you.
Yeah, thank you. And thank you,
And Mary's the
Cindy.
go-to resource on ABLE. Anybody asks about ABLE for us, we just go to Mary, and she's
Yes.
always got the answer. So she stays on top of all this. So thank you.
Thank you, Cindy. And thank you for
Thank
doing
you.
this. This was great. And thank you, Julie, for moderating.
Oh, you're welcome. Have a good evening, everyone.
All right. Thank you. Take care.
Bye.
Bye. Take care.
You too.